Then there has been much lower peak prices, and also there is a capping of peak price that has been done by the regulator. During this period, Tata Power has done exceedingly well. In the last quarter, our PAT has grown, and also our revenue has grown and EBITDA has grown. In this quarter, our PAT has grown by nearly 49%, by 85% from 506 crores last year to 935. Our revenue has grown by 49% from 9,502 crores to 14,163. And our EBITDA has grown by 18% from 1,732 to 2,043. If we look at the H1 data also, we find that in H1 also, like the quarter, the PAT has grown by 87% from 971 to 1819. The revenue has grown by 49% from 19,476 to 28,939. And the EBITDA has grown by 1% from 4,097 to 4,150. This growth has been on back of excellent performance by all our businesses, our existing generation business, hydro business, coal business. All of them have done very well. Our coal mines have also done exceedingly well on back of high prices of coal. Mundra, we have been able to operate the plant under Section 11, and the interim order of the regulator has ensured that we get the full fixed cost, and also states who were not scheduling the power have to pay the fixed cost as we had shown the availability of the plant. And now we are, of course, expecting the order on the full pass-through of coal cost, which will give us a further improvement in our performance in the subsequent quarters. We have also seen all our other businesses doing very well. Our renewable capacity is today, the utility scale is something like 5,660 megawatts on back of the 850 megawatt of projects that was won in the last quarter. This includes 3,870 megawatt of operating plants and another 1,790 megawatt of projects which are under different stages of implementation. We expect that in coming years, with the type of increases, improvements that we have seen in our hit rate in winning projects, we will be able to add a large quantity of such big projects in different parts of the country, and these will not only be just pure solar or pure wind, but will be hybrid projects also. We also won projects under the EPC route, where we won projects of 125 megawatt from NHDC and 100 megawatt from SJVN, and we implemented during this period 625 megawatt of third-party EPC projects also. We have a very healthy order book of nearly 3,800 megawatt with a value of nearly 15,000 crores. Our 4 gigawatt manufacturing facility is going well. The work has started at site and ordering of main equipments have taken place, and we expect to roll out of the first of the modules from the plant by next year, July, August, and the first of the cell by next year, December. So that will help us in meeting our future requirement of cells and modules for our projects, as also for the EPC projects and rooftop projects. In the rooftop business, we commissioned 138 megawatt of capacity during this period, and we also won 330 megawatt of orders totaling to 1,233 crores. With this, our presence in more than 265 districts of the country have happened, and more than 100 cities. And we expect that with our present order book of nearly 400 megawatt, with a value of nearly 1,500 crores, we'll be able to grow this business many more times than what we have done in the previous year and quarters. We already have a cumulative rooftop portfolio of about 1150 megawatts, and this keeps on increasing every month and every quarter. In the solar pump business, we installed nearly 6,000 pumps in Q2, taking our total installation to 17,000 pumps. And we expect that with more than 80,000 pumps across India, we will have a major presence in most of the states in the country. On the e-mobility, we added 722 public chargers, and we have now more than 3,000 public chargers in different parts of the country, including highways. And we have nearly 23,000 home chargers. Apart from this, we have about 240 bus chargers in different cities in the country. The transmission and distribution continues to be very steady and has been growing at a very fast pace. During the quarter, we took over the Southeast UP Power Transmission Company, the Isolex company, through the Resurgent platform. As also, the work on the NRSS 36 transmission project has started. And we expect that we will be able to complete all these projects in next 6 months to 12 months progressively in these locations. Also, we have been able to push our smart meter initiative, and we have nearly 4 lakh smart meters installed in Delhi, Mumbai, and in different parts of Odisha. And we expect that slowly we'll be able to cover in next 3 years virtually all our customers in these places. Our distribution business in Odisha, which we took over progressively in last 2 years, have done exceedingly well. We have been able to not only reduce the AT&C losses to a very large extent, but have been able to also improve the reliability and customer connect. And excellent service is being provided to our customers. Many of the legacy issues over there have been sorted out. There were nearly 20 lakh meters that we replaced which were not working, and all were the legacy meters, the electromechanical meters, and that has helped us in improving the billing efficiency, as also giving the correct consumption that is being done by the consumers. And the results of that will start coming in the subsequent quarters. Moving to our balance sheet, we have been able to ensure that our net debt continues to be less than 40,000 crore. It's about 39,000 odd crores. And this is in spite of the fact that we have done more than 3,000 crore of capital investment in this year. Our working capital also has improved because of better collections in all our businesses, including our renewable business. And we have started getting the money from some of the states which earlier were delaying the payment. And we do expect that all the old outstanding will get liquidated in next few quarters. Our net debt to underlying EBITDA has improved from 3.6 in last quarter to 3.5 in this quarter. Similarly, our net debt to equity has also improved from 1.55 to 1.32, and we expect that that going forward we'll be able to maintain at these levels, notwithstanding the fact that there's large amount of capex that has been planned in our renewable transmission and distribution business. As I had been mentioning earlier, Tata Power has been continuously moving towards a long-term aspiration, and the 12th consecutive quarter of good performance shows that a huge amount of foundational changes have happened, which is ensuring that sustained performance and results are being provided. And I think the directional change that we have seen will help us to further improve in the coming quarters. So we have of course shared with you the detailed deck of our quarterly results, and I now look forward to have your questions, and the floor is now open for Q&A.
Thank you. Ladies and gentlemen, we will now begin the question and answer session. Participants who wish to ask a question may kindly press star 1 on your touchtone telephone. If you wish to withdraw yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Mohit Kumar from DAM Capital. Kindly proceed.
Yeah. Good evening, sir, and congratulations on good set of numbers. So my first question is on the Mundra short-term arrangement. Is it being extended post 31st October 2022? Have you heard anything from the government? And secondly, are you booking the tariff completely on cost plus for the quarter, or is there something which is still being pursued at CERC?
So thank you, Mohit. First of all, the existing arrangement has been extended up to 31st December. And we're not sure whether it will get further extended, but the supply under Section 11 continues up to 31st December. Secondly, right now we have booked the Mundra tariff based on what the Ministry of Power has given as an interim tariff. The difference between the interim and the actual tariff that is to be decided by CERC. As we had shared with you earlier, under Section 11, any generation has to be on a cost plus basis. That means actual cost that you have incurred will be paid to you, and that was the principle on which even the interim order of CERC came, whereby they gave us the full charge for capacity, which is 90 paisa, and no deduction was allowed. And also states which were not scheduling power, they had to pay because we were showing the availability. So the Section 11 principle is very well laid out, and we expect that once the final order comes, full pass-through of coal will be given to us.
Understood, sir. Secondly, sir, what is the status of Mundra long-term draft A supplementary power purchase agreement? Where are we right now, and when do you think we'll be able to resolve this entire thing?
So, since the existing arrangement is going on, Gujarat government has been going little slow on finalizing the Mundra arrangement. So let's wait and watch. If the existing arrangement continues, then this provides us the opportunity to do the supply of power on cost plus basis. Or if that does not get extended, then of course the Gujarat government would come forward and finalize an arrangement which is acceptable to both sides. So I think for the present, we will continue with the existing arrangement, and if there is something that is required, we will discuss and mutually sort it out.
Understood, sir. Thank you and best of luck, sir. Thank you.
Thank you. The next question is from the line of Swarnim Maheshwari from Edelweiss. Kindly proceed.
Hello, sir. Good evening. Thanks for the opportunity. So my first question is, during the quarter in Mundra, was there any reversal of excessive provision? Because post the tariff order, which got defected from 5th of May, before that for about 30-35 days you were outside the Section 11. So post this tariff order, is there any excess provision that is being reversed during the quarter?
What had happened when the 5th May notification came, it talked about that the fixed cost of the capacity charge will be paid as per the PPA or if there is any agreement. Since there was no agreement, but notwithstanding that, Gujarat was only paying at 70 paisa, not the full amount, because they were considering that the interim arrangement that we were trying to sort it out with them the rebate will be given. But the interim order of CERC mentioned that full fixed cost or capacity charge has to be given. So that reversal has happened in the quarter. But other than that, we have not done any other reversal.
Yeah, sir, what is that amount, sir? If you can quantify, please.
So it's a 20 paisa per unit. So whatever we have supplied to Gujarat and Maharashtra, that has been done. And to the other states, they have to pay the full fixed cost, even if they are not scheduling the power.
And if I could add, if you see the notes on accounts, there we have very clearly specified the breakup amount, including amounts pertaining to the previous period. So the total amount that we have been able to recognize is 461 crore, and out of that, 151 crore pertains to the previous quarter.
Okay. Fair enough, sir. Fair enough. Sir, my second question was on the receivable side. So you did mention we expect to see some sort of liquidation in the ensuing quarters, but this is for the second consecutive quarters we have seen that the receivables have been a bit elevated. So any specific reasons? I understand this is from the likes of Odisha and Mundra, but any specific thing that you would want to highlight, that is it some sort of a sticky issue somewhere?
So I think, can I answer that? Yeah. So I think a couple of things. As you predicted it right, given that the energy cost has gone up and to the extent the revenues are high, the receivables would also be high. But that doesn't mean that the quality of our receivables have deteriorated. It's just the overall quantum which has gone up. So in terms of our receivable days, we are absolutely well within control. The good part is many of our sticky receivables that we have been discussing in the past, for example, Andhra Pradesh and other places, they have now started paying us in installment, including all the disputed amount. So we would see quite a good liquidation happening in the subsequent quarters coming in. Similarly, in Mumbai, where they were delaying payment, now they also started paying, and we'll see that the liquidation also happening in the subsequent 3 to 4 months. So I think overall receivables is absolutely within control and as per the plan.
Fair enough, sir. Got it. Thank you so much. Wish you all the best. I'll get back in queue.
Thank you.
Thank you. Participants, if you wish to ask a question, kindly press star 1. The next question is from the line of Sumit Kishore from Axis Capital. Kindly proceed. Hello, Mr. Sumit Kishore. Mr. Kishore, are you able to hear us? So there's no response from the line. Participants, kindly press star 1 to ask a question. The next question is from the line of Dhruv Muchal from HDFC. Kindly proceed.
Yes, sir. Thank you so much. So you mentioned that there is a gap between the interim tariff and the final tariff based on the full fuel cost pass-through mechanism under Section 11. Possible to share what the gap is? It will help us understand the potential benefit that is likely to accrue.
Right now, it will be a little premature to share with you because till such time the final order of CERC comes, we do not know exactly what will ultimately get approved by them. So let's wait for their order. We expect that order to come in November, and then we'll be able to work out the exact quantum and shares.
Yeah, and to add to Dr. Sinha, I think our apologies again. This was a lot of discussion in Q1 that in our investors' deck, we're not giving the separate breakup for our coal profit and mineral profit. And we did mention over there that time that there are certain discussions which is under progress both at the CRC level and as well with the GOBNL, and we did not want to kind of get into a dispute by putting a certain amount. The good part is, as we had mentioned last time, that we will see some clawback happening in Q2, which has now happened, the amount of 461 crore that you mentioned. We are kind of also expecting that, depending upon the kind of order we get, a good material amount should come and hit, a bottom line positively in quarter 3. But at this moment, as Dr. Sinha said, we're not in a position to share you the exact breakups.
Mr. Anand, does that answer your question?
No, I think it was Dhruv who had answered the question, asked the question. So Dhruv is out.
So I guess Dhruv got his answer.
Thank you, sir. The next question is from the line of Abhineet Anand from MK Global. Kindly proceed.
Yeah, thanks for the opportunity. On the solar EPC side, the order book is quite healthy, which is, quite well. Just wanted to understand, in the last few months or maybe in the last few quarters, have you seen an increased competition? We saw, major a number of contracts that Tata Power won earlier was from state, PSUs like NTPC, SJVN and all. Recently, we saw one of your competitors winning a large project in excess of 2,000 crores, and they have now a backing of large corporate. So, any increased competition that you see in the space?
I think the players are the same. Only thing is, what we are seeing is that the bids are coming at a much higher rates, unlike earlier when it went up to 199 and 2 rupees. They are now all in the range of 250 to 3 rupees, depending the location of the plant and whether the land is being given and what sort of profile of generation that is required. So I think there is much more seriousness and credibility that is coming in the bidding process, rather than many who were coming and bidding numbers which they were finding it difficult to execute.
Okay. Secondly, I understand that obviously Mundra has been merged. Is it possible to give some, ballpark number what has been the, performance of Mundra for either 1H or 2Q?
We're not giving a separate breakup here. I think it's kind of all merged in the overall generation business. But as I mentioned earlier, definitely losses kind of partly covered because of the tariff order that we received, the 462 crores clawback that we did. And of course, the difference between what has been allowed as a tariff and what is the expected tariff is still in the CERC. So once we get a clarity on that, we'll have a better understanding of the Mundra profit and the coal mines. For us, both of them are clubbed into one because it's made for each other.
Okay. And I just assuming that, Sinha has told that this arrangement is till 3Q. Given that, let's assume in a hypothetical this doesn't continue and your long-term arrangement that you are talking about still takes some time. What's the, larger picture, long-term picture that we can understand on Mundra then?
What we need to understand is that even with the present pass-through cost, we are still very competitive in Gujarat. And so they will definitely like to schedule power from this plant compared to many others who are at a much higher price. Secondly, once the principles are being laid in the CERC order and all that, so hopefully around that only the final discussion and negotiation will take place. So it will not be on a principle which will be very different than what is decided by CERC. So that's what is our expectation.
And broadly, the principle is near about the cost pass-through, right?
Yes, absolutely right.
Okay, sir. Thanks. Those were my questions.
Thank you. The next question is from the line of Sumit Kishore from Axis Capital. Kindly proceed.
Thanks for the opportunity. My first question is that net cash flow from operating activities at consolidated level has reduced from rupees 2,412 crore in H1 FY22 to 2,138 crore in H1 FY23 if I look at the BSE filing. What qualitatively explains the decline in the net cash flow from operating activities, given there has been a strong P&L performance?
Yes, just hold on. Are you talking about the cash flow from operating activities?
Yes. At the consolidated level. H1 FY23 compared with H1 FY22.
Yeah, I think if you look at that particular sheet, which is a complete long page, has the complete variance analysis, right? And there are items which is moving up and down. But yeah, by and large, from 2,400 that we see in 21 to almost 2,200 crores. For this size of the business, there will be small items going up here and there, but we don't see any significant change in the trend.
Right. I mean, I simply ask this question. I see a lot of moving parts. It's just difficult to decipher because there are regulatory, deferral account assets also, swinging. But obviously the P&L growth has been quite strong in first half of the year thanks to the elevated coal price, among other factors. But somehow the working capital seems to have gone up meaningfully.
Yeah. So as I said earlier, working capital, if you see, it's important to link it with the growth in the revenue because at various locations we'll have credit period, and to that extent, higher revenue leads to a higher trade receivables, with that kind of all good and not overdue in the sense. So I think there will be a higher working capital linked to a higher revenue, but in terms of the overall aging of our debtors, that our DSO, those are all within control.
Sure. My second question is in relation to slide 18 of the presentation, where, again, Q2 FY23 EBITDA before elimination has gone up sequentially from quarter one. It's gone up to 3,222 crore from 2,798 crore. However, eliminations have increased quite sharply. They are almost 1,229 crore in Q2 versus 691 crore in Q1. So when we look at a segment-wise analysis and try to, understand the performance, this elimination increase is simply too high, and that is driving a reduction in EBITDA on a sequential basis. So what explains such a sharp increase in eliminations?
Dividend. Yeah, this is basically on a consolidated basis. You will have the dividend which will get eliminated between the two companies, right? And of course that also reflects that we have received higher dividend, and to that extent that elimination is on purely on account of dividend.
Okay, so that basically is a reflection of the higher dividends received from the coal mine.
Yes.
Right. And finally on Mundra, following the Section 11, what is the under recovery basis the tariffs that you have charged so far? So what is it that you're expecting from the regulator to get a cost reflective tariff?
Well, I think this is an indirect way of asking the same question, given that we are already with CRC, the hearing has happened, and we are expecting the outcome very soon. I think it's better to wait for a couple of months so that we can give you a very precise answer.
Sure. Last question is on the solar EPC, revenue and margins. So for both utility scale solar EPC and solar pumps, the revenue seem to have come off a fair bit year on year. Margins in Q2 have gone up sharply on a sequential basis. If you could please help us with the what explains this volatility.
Yeah, I think your observation is absolutely correct, and I think this goes back to the quarter one conversation where on the EPC we had a negative PAT margin. We kind of went back to the drawing board to see, how best to claw back our profits. So a couple of things that we have done is some of the projects which was kind of dragging down our profitability. We have agreed with the parties and the vendors to kind of defer those projects and to take the benefit of the reducing cell and module prices, as well as, of course, as you are aware, the steel prices also came down by 25%. So that is one. And because some of the projects were deferred, we were able to re-estimate the cost to completion, which resulted in write back of some of those provisions that we were making. I think the better way to look at the H1 EPC margin in totality, which is kind of close to about 2%. Ideally, we would like to have a higher PAT margin going forward, but at least the situation is improved from where we were in quarter one.
Sure. Thank you so much for answering my questions. I wish you all the best.
Thank you. The next question is from the line of Kaundinya N from JP Morgan. Can you proceed?
Yeah, hi sir. Thanks for the opportunity. A couple of questions. Firstly, on Mundra plant. So just trying to understand if you look, you was referring to a bit of slowdown on the part of Gujarat government with respect to resolution. Is it got something to do with subdued demand environment in the second quarter, or how should we look at it?
Subdued demand, no, the demand was not subdued in Gujarat. In fact, we have been operating 3 plants exclusively for Gujarat during this period. So their demand has been very much there, and this is one of the big suppliers. In fact, in terms of single plant, this is the largest supplier of power to Gujarat. And going forward also, our confidence is that though this Section 11 is only up to 31st December, they will continue to have similar requirement in next year also and in the summer period and all. So they will definitely come to some arrangement, and this plant will continue to supply and be one of the main suppliers of power to Gujarat in the coming years.
Mm-hmm. Okay. Sir, other than Gujarat, are there any other states that are also asking for power? Because there was some media article quoting that, Rajasthan was also looking to tap power from Mundra plant. So just trying to understand that part.
So apart from Gujarat, Maharashtra continues to take power. And also for a certain period of time, the Rajasthan had taken. So 3 states have been regularly procuring power from Mundra.
Understood. And sir, I think you are expanded in previous quarter as well, but just trying to understand it better. So can you help us understand what is the way the accounts are being booked? The tariffs are being booked at the moment for Mundra plant?
So right now we have booked based on the full capacity charge, and also whatever is the notified interim tariff by Ministry of Power. So every 2 weeks they come up with the notification of the based on the cost of the ICIC cost of coal, and but the final cost of coal will be whatever is the actual cost of coal that we have incurred for operating the plant.
Just clarifying on that second part, sir. So essentially, there is no under recovery either on the fixed cost part or on the variable cost part. Is that understanding correct?
So on fixed, there is no difference. On the variable, there is a difference right now on the whatever is the interim notified price and the actual price. That difference calculations have been given to CERC. That delta difference, whatever is there, and once CERC notifies it, we will account for it.
Okay, got it. And secondly, bookkeeping question, sir. What is the dividend amount from the subsidiaries to parent in for 2Q and first half? If you can provide that.
Dividend.
about 1,100 in Q2, quarter 2.
So it's 1,102 crores.
Yeah, that's correct.
This is for first half, is it?
That is for quarter 2 and 1,800 for H1 all put together.
Okay, sure. Got it, sir. Thank you very much and all the best.
Thank you. The next question is from the line of Aniket Mittal from SBI Mutual Fund. Kindly proceed.
Thank you for the opportunity. A few questions. Firstly, on the EPC front, in slide 9 of your presentation, you've mentioned that there's been some planned rescheduling of large projects on the EPC. So if you could elaborate on that, and which are these large projects that have gotten rescheduled?
Well, I think this is our one-on-one conversation with the various parties. But I think it's suffice to say that some of the large projects have been rescheduled, and of course with the consent of the parties, to that extent that party also realizes that at the current elevated prices for cells and modules, it will not be possible for many players or EPC players to deliver the project on time, and hence it has been mutually agreed.
Okay. So if I were to look at your current order book of almost 15,000 crores, so how do I look at it from a execution timeline perspective? If you could give some color on that.
Execution normally for any such EPC project that we do for third parties or also for in-house would normally range from 12 months to 18 months. But depending upon the kind of project we're doing, the terrain, the period can differ. But on an average, you can presume about roughly 18 months.
We're just trying to understand if there are any delays or projects, that have gotten stuck because of this rescheduling.
This is planned rescheduling that I was talking about.
Okay, fair. The other question is, when I look at the numbers for TRPN, there seems to be a very large swing on a YOY basis. I think against a profit of 210 crores last year, there's been a loss of 29 crores reported this year. So what's the reason for that?
Foreign exchange gain. There was a one-time foreign exchange gain which was booked last year. 200 crores, yeah.
Okay, it's turned into a loss this year of 29 crores.
PPI. Are you referring to slide number 19 of the deck?
Yes, slide number 19 of the deck.
You're looking at the TERPL shipping company, right?
Yes, you could look at slide 18 actually. I think slide 18 will find the numbers for 2Q. So against 214 crores of profit last year, it's coming at minus 29 crores.
Yeah, so we had booked a 200 crore of forex gain last year for the same period. This was on account of
reporting the loss and
sharing.
Yeah. That was for sale of shipping that was done. Since that money was at that time parked in Singapore, when we brought it over here, we booked 214 crores of forex.
Okay. Just a related sort of question on the EPC front. So when I look at the renewable capacity that we have under development, which is I think 1.8 gigawatts, the commissioning timeline, could you help me on that in terms of
Most of them are next 12 to 18 months. So our target is that by March 24, most of all of them will get commissioned. That's the time.
Okay, how much do you plan to do in FY23 and how much in FY24?
We can share the details. I don't have it right now, but we can give you.
Yeah. So ballpark for the first H1, we have commissioned 450, megawatt. Commission.
That is our own utility scale.
Yeah, the question was on utility scale?
No, total.
Total. That will share with you separately.
Okay. Just one last question on Mundra. I understand you can't talk about the difference or the under recovery. Could you help me? What's the average tariff that you've realized for Mundra for 2Q and 1H that you've actually booked in your numbers?
It's about 550, 570, by around that. But the notified tariffs have been between 6 rupees 20 paisa to 480. So that's the notified. So that's the difference.
So we've booked around 550 to 570.
Yeah.
So, and this is for 2Q or this is for 1H?
Q2. Because it's not 1H fully, it's only part of 1H.
So 550 for 1H?
No, not 550. 1H. You are mixing up. See, this whole notification came from 5th of May, so it is not 1H, it is only part of 1H.
Yeah. Okay. That's why we kind of hesitating in giving you a breakup because it's a bit complicated now, and it's better to wait for the complete clarity to emerge. And I'm very sure before the next quarter call, we'll have a complete idea as to the exact under recovery or to what extent we're losing or gaining.
Okay, no worries. That was helpful. Thank you. Those are my questions.
Thank you. The next question is from the line of Apurva Bahadur from Investec. Kindly proceed.
Hi, sir. Congratulations on the good set of numbers and thank you for the opportunity. So you spoke on this provision write back for the solar EPC business. Can you please share the quantum? How much did we write back in this quarter?
We'll be able to send you separately because there are many projects and the provisioning write back is on account of various things. So it will be difficult to just quantify one number and give it to you. I think, as I said in the previous question, that depending upon the time of completion and then towards when the project is getting completed, we do a true-up for cost to completion. And normally on a conservative basis, we try and make more provisions to be on the safer side. So given that some of these projects have been rescheduled now and the cost of sales modules steel has started coming down, we have done a reevaluation on the cost to completion and find that we will be in a position to claw back some of these provisions.
Okay, sir. So secondly, on the overall green company portfolio, right, the profitability has been lower year on year. Now I understand that some part of it would be because of INR depreciation and rise in interest cost. But the EBITDA margins also appear weak, especially for PPREL. So can you share the breakup between this operational, the decline in profitability is due to operational issues and also the impact of INR depreciation and interest costs on the renewable portfolio?
So we'll share with you. See, if you see our H1, the EBITDA has actually gone up, and so it also depends on what sort of wind speed and what sort of solar intensity is there. So in the first quarter, we had very good wind speeds and better solar intensity. In the second quarter, because of the extended monsoon, the solar generation was less. But the details we can share with you. We can give you that how the trend change has taken.
Okay, sir. That will be very helpful. Sir, also just wanted to check in this quarter, this Western Odisha Discom numbers appear quite strong. So is there any one-off or incentive that they have booked during the quarter?
No, we have not booked any incentive. The performance has improved, and I mentioned to you our AT&C loss has reduced, our billing efficiency has improved, our collection efficiency has improved. So I think it's a general performance of the business which has improved, and with better billing and better metering, we will be able to show much better performance in future quarters.
Sir, I understand that. Just specific to Western Discom, because that appears a bit better than the other discoms. Odisha Discom people took over around the same time. So anything specific over there?
So Western Discom has more of industrial consumers. So EHT and HT consumers are very high over there, and that's why it has shown much higher increase in consumption compared to others.
Okay, got it. So just one last question, if I may, and I'm sorry for harping on again this Mundra issue, but just for sake of clarity, while the notified tariff is around 6 rupees 20 paise per kilowatt hour, we are booking around 5 rupees 50 paise since the notification came, and this 6 rupees 20 paise, there's a further possibility of a further upside if CERC comes up with a favorable order. Is my understanding correct?
No, your understanding is wrong. See, I mentioned to you that they notify the tariff every 15 days. And the tariff has changed because the price of ICI index coal has changed. It started from 620, it went down to 470, and now it has gone to 596. So it keeps on changing every 2 weeks. But when you get the coal, you get coal over a period of time, and based on the actual cost of coal, you are going to bill them. So that is the delta difference that will happen. And till such time the order of CERC does not come out, it would be speculative to give you a number and say that this is the number.
Okay. So, sir, the average notified tariff would be around 5 rupees 50 paise?
No, that's where I'm saying you don't get into average, and there is a different price on every 15 days basis they are giving. You should then see the 15 notifications that have come. If you want that, I will send it to you.
Yes, sir, that will be very helpful.
Otherwise, it's there on the Ministry of Power website also. You can see it.
Okay. Thank you so much, sir. That's all from my side. Have a good day.
Thank you. The next question is from the line of Dhruv Muchal from HDFC Mutual Fund. Kindly proceed.
Yeah, sorry, I got disconnected earlier. Some of the questions have been answered since. So just one question on the Odisha Discom. We see the performance is improving. We understand the circle is still developing, but we also notice that the regulatory assets are increasing. So should we understand this primarily because of the fuel cost, or is there some other element to this?
So the regulatory asset adjustment takes place on an annual basis. So it's a question of timing of some of the regulatory assets which is there, which will get adjusted as of the end of the year. So it has nothing to do with the fuel costs and all that, because in Odisha there is one single tariff that is charged by the generating companies, and we also charge one single tariff on the consumers. So this is because of whether it is the O&M cost or it is on the billing efficiency and things like that. So at the end of the year, that true-up will take place, and you will get the exact numbers of whether there is an increase or decrease. And depending upon that, the tariff fixation takes place for the next year.
Got it. And so the second, just a follow-up on one of the earlier questions on the shipping company. We understand the delta movement because of the FX, but we wanted to understand what's driving the loss in the current quarter. And probably also in the first half, the profitability is a bit lower. Because we used to understand that this was a leasing arrangement where the profitability was largely assured. So just trying to understand what's driving the loss.
So the billing that we are doing on shipping is based on the CERC index. Now, once we get the actual cost of shipping that is there, then we'll be able to decide on it whether that needs to be reversed.
Okay. So, got it. Sure. Thank you so much. Thanks.
Thank you. The next question is from the line of Ajay Mehta from Wipro Limited. Kindly proceed.
Yeah. Good evening, everyone, and thank you for giving me the opportunity to ask this question. So my first question, sir, to you is that considering the environment when interest rates are rising, So what is Tata Power's plan on reducing the debt? Because debt are still at an elevated level, right? Even though YOY we have come down, but still the average debt cost has risen from 6% to 7%, right? So what is the plan to reduce the debt going forward?
No, I think when you look at the overall net debt of the company, in spite of all the capex that we have done and of course incremental working capital because of higher revenues, our total net debt is still below 40,000. What is important to look at it from a perspective of the leveraging, from net debt to equity position, and our leveraging is well below 1.5. Our targeted leveraging was 1.5 at the Tata Power level. We're standing at 1.32 right now as we speak. Interest level, yes, we are kind of around 7% if you look at the current quarter, and when we looked at a year back, it was around 6.6%. So we have seen about a 40 bips increase, but that is against almost 190 bips increase in the base rate. So I think we have been able to manage our interest rate quite well, including some of the international borrowings that we have done, including a recent 320 million borrowing that we did on a sustainability-linked loan. All put together, we've been able to kind of contain our overall cost of debt quite well.
Okay. Thank you for your answer, sir. And my second question is, I just saw in your note that there was a cyber attack, right? Even though there's no impact of financial, and I believe you guys have taken the recourse also. So is there any action still pending to be done which would have an impact on Q3 numbers due to the cyber attack?
No, there's no impact in Q2 also. Very clearly, the financials, the SAP systems and all have been well protected. We did not have any impact. We did not have any financial loss as well. Our operations, collections was as usual for us. So yeah, we don't see anything happening in Q3 as well.
Okay. And sir, my last question is, what is Tata Power's vision with respect to this EV charging, right? I know you guys are increasing your footprint quarter after quarter with increase in the number of cities being added, number of clients being added, right? Number of apartments, connectivity is improving. So what is the path going forward, from a next year perspective, in terms of the growth that we see in the EV segment?
So our objective is that we need to provide seamless experience to the customer. And when we say that, if you are having automobile in your home, you should have a home charger, which we should be able to provide. If you are traveling intercity, then whatever charging you need to carry out, you should have a seamless experience over there. Then for public transportation, the bus charging infrastructure. Now, as far as the home charger and the bus charging is there, that is on a cost plus basis that we do. As far as the public charger is there, it is on a fee or a subscription model which is there. The consumption of that or the utilization of public chargers is much less today because most of the people still continue to use home chargers. Also, the penetration of electric vehicle has not happened to that extent. So we are creating an infrastructure so that over the next 2-3 years, when the penetration of electric vehicle increases, the utilization of these chargers should increase from the present about 2% to about 15%, by when it will be able to sustain its operation on it.
Sure, sir. Thank you so much for answering my questions. Thank you so much.
Thank you. Participants, if you wish to ask a question, kindly press star 1. The next question is from the line of Subarni from Spark Capital. Kindly proceed.
Yeah, good evening. So this is Bharani from Spark Capital. Sir, what is your view on the international coal prices over the next, say, 2 quarters, and what would be your rationale for that?
Well, globally the coal prices have been very high, and we do not expect that it will reduce at least for next 12 months. So we expect that the coal prices will remain high. Now, whether it will be at the present level or a little lower than this, I cannot predict that. But yes, the coal will be in demand, especially imported coal will be in demand, considering the global need for energy substitute.
Sure. Could you share the FOB realization per ton and the gross profit per ton for the KPC mine for the second quarter?
We don't do the sell of coal over here. So that details we can give you from the KPC report, sir. We don't have that with us. We can share with you the KPC.
Sure. Thank you and all the best.
Thank you. As there are no further questions, I would now like to hand the conference over to Dr. Praveer Sinha for closing comments.
Thank you, Vivian, and thank you to everyone for joining in the call. And in case you have any further queries, any other details that you would require, please connect with Kasturi and Rajesh Lachani, and we'll be more than happy to furnish you the same. And once again, season's greeting and all the best for the session.
Thank you. On behalf of Tata Power, that concludes this conference. Thank you for joining us. You may now disconnect your lines.